Are we entering a new era, Marcus, of currency wars?
No, I don't think we are. I think there's been a lot of fine talk, or not so fine talk, this last few days. I think Mr. Trump came in and played nicely. And I think the comment from Mnuchin, which they've slightly rode back on, did exactly what they wanted. So they knew exactly what they were doing. And I think it's quite amusing. You look back at the ECB's reaction to that. Well, really, the greatest currency manipulation of all is quantitative easing. By issuing more and more and more of your own currency, you are, by definition, manipulating against everything else. Plus, if you have a negative 40 basis point deposit rate, you are doing everything in the world possible to weaken your currency. Therefore, it's a little rich to turn around and start blaming other people. However, clearly there's some G20 protocol which was overstepped by some slightly vaguely ambiguous terms from Mnuchin. The market took it a certain way, and clearly the ECB have realised they've got a problem in handling this because they don't have the tools to stop the dollar rising and the euro.
Trump's comments initially did stop the dollar rising, but it's on its way down once again. If the president can't stop the dollar's decline, what's going on?
Well, the president doesn't really want to stop it. That's the whole point. And the president of the ECB can't do anything to stop it either.
Yeah. No, neither president has much power over the dollar, nor does many other people. Bonnie.
Well, Mark, I was just going to ask Marcus, I mentioned it there in the data check, most countries saying, oh, we don't really mind about the pair, or if you like, it's a basket of currencies that really concerns us. But you can't ignore that every single currency, whether it's an emerging markets currency, the yen, all of these currencies are strengthening by default against this weakening dollar. What does it mean for these countries and their economic and monetary policies?
Well, I think let's tick them off pretty quickly. Against the euro, Mr. Draghi couldn't really complain. The fact is the European economy is coming back strong. That's been reflected in a stronger euro. Now, the fact the US economy is even stronger, that's why I don't think the dollar is rightly weak at this point. But nonetheless, likewise we've seen with the UK. The GDP numbers today, the unemployment numbers, particularly early in the week, very strong. You can semi-justify why sterling is so strong against the dollar, maybe, though, likewise, you said trade weight index for both the euro and the sterling is pretty flat, nothing much to see here. The one I think is more interesting is against the yen. Now, if you look at the recent Tankan reports, they have been quarterly, it's where Japanese corporates, who are very largely export-driven, mark their dollar-yen rate. And 110 is clearly the level where pain starts for them. We're through or below that now. This is something which Kuroda's comments today are slightly surprising for the market. They thought he might have rode back on it, but he's actually trying to take some almost Draghi-like basically success factor that he's managed to get inflation, which is their main goal there, getting slightly higher. Little surprising from Kuroda, but he's slightly battling a replacement battle himself. But that's the one to worry about, dollar-yen. I think that any further weakness than that down towards parity 100 would be quite worrying for Japan.